Do you guys remember back in 2022 how car companies were supposed to go all electric and print money? Well, Stellantis jumped in hard, but then profits crashed 70% and revenue also dropped 17%. Now they're switching to hybrids and betting on America. Stick around, I'm breaking down if this stock is about to turn around in 2026. But full disclaimer, I am not a financial advisor. Always do your own research. I'm not telling you to buy the stock or to sell your stock or do anything with it. I am simply just providing information and you guys can make that decision by yourself. And with that being said, please give this video a like and consider giving this channel a subscribe and we'll dive right in. So for those who don't know, Stellantis, ticker symbol STLA, is this massive multinational car company that came from a merger between Fiat Chrysler and Peugeot back in 2021. I don't know if I pronounced that right, Peugeot, but they design and build vehicles under a bunch of brands such as Jeep, Ram trucks, Fiat, Peugeot, and you name it, several others. They make money from car and truck sales, and with that money they pay dividends to their shareholders, so it's a pretty straightforward auto business. Today I'm going to walk you through how it really works day to day, what I like about it, what kind of worries me about this company, and if it's worth putting your money in during 2026. Stick with me. So back in 2021, two big car companies, Fiat Chrysler and Peugeot, merged to create this giant multinational automaker called Stellantis. They're headquartered in the Netherlands and have about 248,000 employees building vehicles in 30 countries. They make money by selling those vehicles worldwide. But here's where it got rough. They merged right when we were in the middle of a pandemic, causing massive supply chain problems, and toggled with a semiconductor shortage that made it hard to build anything, especially electric vehicles. They pushed very hard into electric vehicles under the first CEO, but the demand was so weak and the supply chains were such a mess that by 2024, prices were too high and customers started going to their competitors instead. Revenue dropped 17% with profits also crashing at 70%. They bounced back a bit in 2023 when supplies improved and they could charge more, but it didn't last. Revenue has been sliding since 2022 and they stayed profitable through 2024, but 2025 brought the first real net loss because expenses kept growing while sales shrank. The original CEO stepped down in late 2024 and the new one took over in 2025. Now they're refocusing on profitability, cutting costs, and shifting big time towards hybrids instead of full electric vehicles. They're also investing more in America, ramping up production and adding 5,000 new jobs in the Midwest. It's a huge auto business with a lot of moving parts, global sales, factories everywhere, but right now it's fighting to turn things around. So now the real question, is Stellantis still worth investing in during 2026? Let's look at the good parts, the bad parts, and what I really think. So first, the good parts. The stock has been trading low right now at around $8 per share, which makes it look cheap compared to what it could be worth if things turn around. They have some of the strongest brands in the world like Jeep and Ram that people still want. The new direction is smart. By focusing on hybrids instead of forcing full electric vehicles, it gives them a better chance with buyers who just want the fuel savings without going all in on electric. They're putting more money into factories and production in the US, which could bring steadier sales over here. If the plan executes well, there is room for the price to climb. Now the bad parts. The auto world is tough. High interest rates make car loans expensive, so people buy fewer vehicles. Competition is fierce. You have Tesla, Ford, GM, Toyota all competing for the same customers. If the hybrids don't sell as hoped or costs stay too high, margins could stay squeezed. The stock has been volatile and any slowdown in the economy hits the automakers very hard. So now my take. If you're like me and you like stocks that are beaten down but have a realistic path going forward, Stellantis could be interesting. I'm not gonna lie to you guys, it is risky. The industry is cyclical and they've been struggling. It's a massive gamble to invest in this stock given the circumstances, but I think it will recover. It's tough to say if this company will grow in the long run given that it's been volatile the last few years. So if that's something that you guys want to risk and invest in, I'd say go for it. Again, just to clarify, this is not financial advice, so please always do your own research. And with that being said, that is Stellantis in a nutshell. If this breakdown helped you see the full picture in this auto stock, please hit that like button and subscribe so you don't miss the next one. Also, comment down below what stock I should cover next. And if you're not on Robinhood yet, use my link in the description. You get a free stock when you sign up, which could be worth $5 to $200. There's no fee in signing up. You just fill out the form, and it also helps support the channel. And if you guys like these kinds of breakdowns on these stocks, I'd advise you guys to check out this video that I did on this gold stock called BTG, which has been showing some signs of growth with passive income on the side. Again, thank you guys for watching, and I'll see you guys in the next video.